Well, in an exclusive interaction with ET Now, the management of DLF, Mr. Ashok Tyagi, joined ET Now exclusively to speak about various aspects of the real estate business. He had a free-flowing conversation with our anchors where he spoke about, number one, the real estate sector overall, how it has done in 2020, last couple of years, how the sector has panned out, going forward, what is it that he expects from the sector in 2021 and beyond. We also quizzed him about the commercial real estate side of the business, the retail side of the business as well. We spoke to him about what is the project pipeline that DLF has. We also spoke to him about the recent acquisition that the company did in terms of Heinz acquisition, and this is for the Gurugram project. We spoke to him about how low interest rates. We spoke to him about demand trends. We spoke to him about pricing. And also, we asked him and quizzed him about the impact from the latest work-from-home culture that has emerged as a big trend in 2020. Remember, a lot of brokerages, a lot of analysts are extremely bullish as far as DLF is concerned. In fact, what they are saying is that the Gurgaon project, in fact, Morgan Stanley states that Gurgaon space that has seen significant real estate market dynamics deterioration is finally turning around the corner. In answer to all of these questions, in fact, Mr. Ashok Tyagi sounded quite bullish. He said the demand is actually back across most of the key segments. He said that even super luxury segment projects are actually seeing quite a bit of a strong demand. What he is saying as far as the strong demand is concerned is that he believes the key reason for the strong demand is the affordable as well as lower real estate prices, as well as the very low and affordable interest rates are some of the key reasons. Remember, home loan interest rates are at multi-year lows, and what he is saying is that in terms of the demand, he believes that a lot of the demand is actually being seen as far as the ready-to-move-in projects are concerned. Some of the under-construction properties too are seeing a certain amount of demand come in. However, this is only from reputed builders with a very strong track record. He is also saying that in terms of sales traction, he expects it to continue to remain robust. They've seen quite a bit of strong sales traction as far as Camellias is concerned. They've been quite positively surprised as well. So what he is saying, in order for real estate developers to ensure that demand is robust, they believe that a sound location, a strong product, and reasonable pricing are some of the key aspects. In terms of restrictions for malls, he believes some restrictions in terms of footfalls, in terms of crowds. A lot of it is still in place. Retail, according to him, has the toughest Q1 as well as parts of Q2 were impacted significantly by the lockdown. He is saying that malls at 60 to 70% of pre-COVID levels is something that is quite positive. Office collections have been resilient. A few certain new signings have come in. However, he said that a significant amount of companies are still hesitant to take up or make new signings in terms of leasing office space. Overall, a very good conversation, and given the fact that one of the biggest players in the realty space is actually talking about quite a bit of revival, it will be interesting to see how real estate pans out in 2021 and beyond.